One of the world's most valuable and influential companies, Apple, now stands on the brink of the biggest crisis in its history. Despite the apparent thaw in US-China relations after Donald Trump's meeting with Xi Jinping, beneath the surface of diplomatic smiles, a new threat is forming, one capable of paralyzing Apple's entire ecosystem. The main reason is rare earth minerals, the invisible elements without which no iPhone, MacBook, or battery in any of the company's devices can function. And nearly the entire global supply of these materials is controlled by Beijing. According to sources cited by Financial Times and Nikkei Asia, China is deliberately slowing down exports of rare earth metals to the United States, citing technical inspections and internal quotas. In reality, analysts from the U.S. Council for International Trade describe it as a form of strategic pressure, a mineral chokehold that China is tightening around America's tech sector. Apple is the first in line to be hit. More than 90% of all iPhones are assembled on Chinese territory, in factories run by Foxconn, Luxshare, and Pegatron. But that's just the tip of the iceberg. Lithium, neodymium, terbium, gadolinium, all critical materials used in batteries, speakers, vibration motors, and even iPhone camera lenses, are almost entirely controlled by Chinese suppliers. If Beijing decides to restrict exports, Apple simply will not be able to produce its devices. According to Bloomberg, in recent weeks, Chinese customs authorities have intensified their scrutiny of mineral exports, while American companies have started receiving notices about new certification requirements. Industry insiders describe what they call deliberate slowing, which may be a signal to Washington. China seems to be hinting that if the United States wants to pressure it with tariffs, Beijing can stop its technological flagship. And the White House understands this perfectly well. Sources cited by Politico say that Apple's dependence on Chinese supply chains was one of the main topics during the most recent closed-door meeting between Trump and Xi Jinping. According to participants, the US president tried to persuade Xi not to use rare earth elements as leverage, promising in return to ease some trade restrictions. But as analysts from the Wall Street Journal note, this was nothing more than a diplomatic ceasefire, a temporary pause before the next escalation. For the United States, Apple is not just a company. It is a symbol of American leadership, innovation, and technological supremacy. And if that symbol falters, it would be a geopolitical defeat. In Cupertino, they are fully aware of the danger. In recent months, Apple has accelerated its efforts to shift part of its production to India and Vietnam. But according to Reuters, even under the most optimistic scenario, this process will take years. At present, about 95% of all components still depend on China, meaning any tightening of export rules from Beijing could be a fatal blow for Apple. Some analysts are already calling this the mineral crisis of the 21st century. Reports from Bank of America indicate that the US reserves of rare earth elements can cover domestic needs for only 3 to 4 months, after which production disruptions will begin. At the same time, investor pressure is mounting. Amid all this, Trump is trying to maintain public confidence. In a recent speech, he declared that America would not allow dependence on China for the technologies of the future. But behind the scenes, the picture looks different. Congress is discussing the creation of a strategic fund to support US microelement producers, while the Department of Defense has already been instructed to start purchasing minerals from allies such as Australia and Canada. Experts, however, warn that even if the United States manages to establish alternative supply channels, it will take immense costs and years of work. Moreover, China is increasingly resorting to covert methods of pressure, new environmental regulations, factory inspections, temporary export suspensions, all of it formally legal, yet effectively turned into tools of blackmail. According to analysts from Eurasia Group, China is using Apple as leverage against the United States. And that leverage works. Inside Apple, tension is growing. Engineers report shortages of components, and some production lines in Zhengzhou and Shenzhen are already operating on reduced schedules. Rumors are leaking into the media about delays in the release of the next generation of iPhone and Apple Vision Pro, but the company has offered no official comments. Apple's leadership is trying to avoid political statements, fearing to worsen relations with Beijing. As American media note, Tim Cook finds himself in an extremely difficult position. He is literally balancing between two superpowers, trying to maintain neutrality. But neutrality in the era of trade wars is a luxury no one can afford anymore. And although a full ban or blockade of supplies by China is unlikely, such a move would mean the complete collapse of relations between the world's two largest economies. Analysts increasingly discuss a scenario of sliding pressure. In this approach, China does not strike directly, but gradually slows shipments, raises bureaucratic barriers, and creates delays, forcing Apple to lose time and money. In the long run, this could prove even more destructive than an outright blockade. After all, Apple operates in cycles. Every quarter, every week of production is worth billions of dollars. Any disruption in the supply chain immediately affects schedules and stock prices. Thus, the fate of the American giant now effectively lies in Beijing's hands. And everyone understands this, from Washington to Wall Street. That is why the meeting between Trump and Xi was not just a diplomatic gesture, it was an attempt to buy time. But time is not on Apple's side. China, it seems, has for the first time in many years realized that it holds the ultimate trump card in the technological war of the 21st century. And that trump card is not weapons, not oil, and not tariffs. It is rare earth minerals, without which the heart of Silicon Valley stops beating. According to CNBC sources, emergency measures are already being discussed within the White House, including temporarily exempting Apple from certain taxes and accelerating funding for American companies capable of producing critical components within the United States. However, experts note that even if these measures are approved, they will not be able to quickly offset the Chinese factor. Apple is too deeply integrated into the Asian industrial ecosystem. Meanwhile, according to analysts at JP Morgan, investors have begun preparing for a scenario in which China imposes partial restrictions, which could lead to a 30 to 40% drop in iPhone shipments by the end of the year. Against this backdrop, Asian media are actively discussing the possibility that Beijing will give priority to local brands, Huawei, Xiaomi, and Oppo, strengthening their position in the domestic market at the expense of Western competitors. Some insiders claim that the Chinese government views Apple as a symbol of US vulnerability and intends to use this pressure to extract political concessions. At the same time, warning signals are already coming from Europe. The European Commission has stated that a potential disruption in Apple's production could also hit European markets, as millions of devices are assembled from components manufactured in the EU. The entire global economy tied to Apple's supply chains is literally holding its breath, because if China takes the next step, the crisis of one brand could escalate into a global technological collapse. And more analysts are convinced that the crisis Apple is facing is not an isolated episode, but a symptom of a profound shift in the global technological balance. According to experts from the Institute for Strategic Studies, Beijing is deliberately building a new model of dependence in which China itself becomes the center of production, supply, and processing of key resources of the 21st century. Washington, in response, is accelerating the development of technological sovereignty programs. But even the largest grants and tax incentives cannot instantly compensate for 3 decades of dependence on Chinese factories and mines. Apple, despite its image as a global leader, has become a hostage of the very globalization it once symbolized. And now every iPhone rolling off the assembly line in China becomes not just a product, but a reminder of how fragile America's technological supremacy has become.